Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon. October 20th, we are looking at the SPY ETF's market profile here on Window Trader. And I'll tell you what, interesting day, inside day, which is going to make for a very nice setup tomorrow. This back and forth with the stimulus is beyond aggravating for the simple fact that this stimulus doesn't help anybody but big companies and everything else. So the market reacting to it, it's not going to help the little guy, that's for sure. So enough is enough by both parties. Either agree to it, don't agree to it, but it kind of stinks waiting all day to trade on it, to worry about it when you're in a position, to have two people about to make a phone call, and yet everybody else is publicly either for it or against it, from McConnell to Schumer to Romney. I mean, enough. It's just horrendous. The way it's going, again, I try not to be biased, but I'm not too positive about it. And if that's the case, we could see some decent downside if we come out of this inside day to the downside. But I went on flat. I'm trying to be unbiased. As you can see right now, Netflix came out right after the bell and sold off. And end period just made a new low in SPY. We end 8 wide. We absolutely annihilate and trap weak longs up here, who finally got flushed out in L. We did get into the upper distribution from yesterday. So we opened above the lower distribution, stayed out of it, barely tested M. Played most of the day in the middle distribution, filled these singles. They got pretty bold when Pelosi said, hopeful for a deal, but boy, did that go out the window real quick. And from a chance for a trend day up, we end 8 wide, and the only destinations I have for tomorrow right now is today's high, today's low, which is going to make for some really wide destinations and some fun trading, whichever way we come out of this inside day. As far as my trading went, had a good day. Well, would have had a good day. Tomorrow the money should be there. So, I mean, this is 8 days of fake trading. Boy, is it frustrating. But yesterday I would have either broke even or lost small. Today I would have pretty much ripped the ball all over the ballpark. 7 trades, 6 of them short, would have made money on all 7, and none of them with any big contracts. One where I would have added, which I'll get to in a moment, would have paid huge, but because this phone call was taking place, I would not have added on to it. I'll tell you that one in a second. So in A period, we went up, didn't do anything initially, took a short against the single prints and J's low. I did the 345 puts. Twice it would have worked out. Twice we got up there. Twice we basically backed off. Actually, I apologize. One against J's singles would have worked, and then the second one when we got close to K's high, that would have worked. So 2 shorts in A would have worked. Then again in B period. Yes, we were one time framed up, but we had the second set of single prints starting, and then the bottom of the lower upper distribution. So I would have taken 346 puts twice in B period. That would have worked out nicely. And again, they were only 20 contract lots, but all 4 of them would have worked very nice. Now, wouldn't have done anything in C or D. I was curious. I was tempted to take a long in D because the way I didn't think we were going to trend up just yet in B and have single prints, I didn't think we'd have single prints to the downside in D. However, I didn't like the fact that we dipped out toe into the second set of single prints and then stopped and immediately stopped the one-time framing up and then started one-time framing down in D. So I would have waited, and then we got back in the range, and so I missed that trade. So, but again, I wouldn't have been unhappy. What I would have done is E period. So D we've one-time framed down, and then E stopped it, and as soon as we stopped the one-time framing down, I bought the 342 calls and rode those up at the time in E and F up to basically, I think it was, I was looking for, I think C's high, took the rest off right as we got to C's high. So that would have been a nice call play. And that's my only call play of the day. Now, G period. Took out the day's high. Didn't think we would have single prints again. Took a short against the the upper distribution's lower range, that one would have worked out. And then the one that would have worked out big for me, especially if I had added K period. We took out the eyes low, didn't short it yet. K came, did the same thing. Finally, I would have taken a short in K. Paid, I think, $310 for the 347 puts. They went against me. I held on to them. When L period went up, now this is right around 3 o'clock, right when the phone call was supposed to start. I was like, well, they're against me a little bit, these puts. If there was no phone call coming, I would have added pretty decent size here for a couple of reasons. We're one-time framing down. Buyers are getting nothing for their trouble here in G, H, I, J, K, and the beginning of L. Even though we stopped one-time framing up, they were still trying to push. I'm like, they haven't flushed out yet. And the most important out of all of it was I said in the room, I said in the trading room, here is your go, no-go. D's low and B's high from today. If buyers do not stay above D's low and get accepted back into B's range, we are going to flush. So it would have been a beautiful add-on. I didn't. And then what happened? Boom. Flushed. Would have been a nice trade. So whatever I had on the that I would have had would have made nice. Wouldn't have held on to them as long. Would have taken them off probably at park. And then you saw what happened afterwards. But it would have been a nice trade and a very good trading day overall. Okay. Let's go over destinations for tomorrow. So we close at 343.30, and 343 is becoming a very big sticking point in my head, which I'll show you when we get to the charts. So 346.88, today's high is my first destination. So that's over $3.50 away from where we close. Now, obviously, M's range will be huge again tomorrow if we open inside of today. But the firm destination is today's high, 346.88, and then 348.34. Those single prints last set get filled at 46 cents from the 19th, and then 349.33 daily high. For the downside, we have today's low of 342.64, yesterday's low of 341.04, and then you should have all the other destinations I've given you this morning on the downside. So, what's going to happen? Well, let's go to the charts and what I'm looking at. So here's the monthly. We have an inside month going on right now with 8 days to go in the month. I still think the odds of an inside month are very good. And I said we have to, the first day of October I said that. Is that playing with a crystal ball? Of course not. We had a large range in September. So it wouldn't surprise me if we have an inside month. Now the weekly, this is the important one. So, let's see if we could bring this bigger into the picture here. Here's what's important. We stopped the one-time framing up this week. The next destination is 2 weeks ago's low of 334.38. This weekly high from September 14th is incredibly important to me, 343.06. So I'm just rounding out to 343.03. That's where change took place. When this week took out that week's high, change took place, and nothing was in our way between getting above that and the all-time high. Well, we've been dipping our toe back and forth inside this 343 level. We closed above it, but we keep dipping our toe back into it. Just like the triple Q's 283 is huge for me, and they closed at 284.51. So they're above it by $1.50, and IWM closed at 160.83. The big level for me is 160 there. So they're tempting fate each time we get down there. If we get accepted below last week's low, which is 343.13, and again we closed right above it again. If we start getting acceptance below last week's low, well, the next destination is going to be 334.38. That's that weekly low. And on the daily, basically the same thing. If we take out today's low, here's your inside day. We traded totally inside yesterday. And look at this candle. Look how ugly this candle is, where we pushed up in the afternoon only to close right at the day's low. Now, Does that mean we're coming out of an inside day to the downside and we're going to go right down to that 334 destination I'm talking about, which is right here? Of course not. But I would be a little worried if I was long right now. Tomorrow's going to be huge. Again, is this phone call going to end today and they're going to finally come to their senses and they come together with a deal? Well, if that happens, then we're going to probably take out the inside daily upside. But if there is no deal, or there's still no word of a deal, at some point this market's going to get really agitated, and they're going to take out what's going on the market, and we'll take out these two daily lows. You'll have a pit stop at the 50-day moving average, and then eventually you're going to go down to that weekly low. So that's how I'm seeing things right now. The volume today, 54 million, again below average. So the volume is not picking up. It's still short-term traders. We'll see what happens. Again, we had an excellent day in the trading room. I am doing a webinar with Window Trader this Thursday. So if you go to Window Trader's website, you could sign up. I'd love to have you, especially people that watch this video, people that follow me on Twitter that aren't in the room yet. You do see these videos and stuff, but it's going to be a one-on-one with Window Trader and myself Thursday afternoon, 4:30 p.m. Eastern time for an hour. So I'd love to have people who are on the fence about joining my room and what we can provide and what we teach and show. Check that free webinar out for an hour. And maybe you like what you see and you come and join us at camelbacktrading.org. Thanks for your time. Have a great night. If you like what you see in here, please subscribe. Stay safe, and we'll speak prior to the opening tomorrow.